Hi everybody, Bob Icino, co-portfolio manager with Mike Arnold of the Stock Think Tank, and I wanted to bring you a quick update because the portfolios are emptying again, and we've seen this before. Month of April, we outperformed the S&P again, not by as much this time, only about 30 or 40 basis points. The S&P and the Dow continue to make new all-time highs. A little bit of weakness out of NASDAQ and the Russell lately, Russell especially, but NASDAQ as of late. But the S&P and the Dow are still kind of chugging along. And that's what happens with our method because we look for value. We look to buy solid companies with a little bit of extra oomph to them, a little bit of room to run, but we don't buy crappy companies. And when these indices extend, we tend to lose out on the ability to pick trades because the value scans that we use can't really find us anything to analyze the price action for. So now we're sitting with as I'm speaking to you right now, we exited another trade today. We got out of Aflac, and we're sitting there with 2 stocks in the core portfolio and 2 stocks in the special plays portfolio. One's a silver ETF and one is SIBO. And in the core portfolio, we go back to Checkpoint Software, which is a fairly recent one, and then Walmart, which we still have in the portfolio. Now, I've had new people actually email me and say, well, we're not getting a lot of picks. When are we going to get some picks? That is something you have to be patient about because while we're emptying the portfolio that it took us a matter of weeks to fill up, we're actually locking in gains. And then when that eventual sell-off in the larger market, the broader market comes, we're able to load up. Those of you that are new are not able to take advantage of that as much, but you'll still be able to take advantage of the new picks as they prove value. So that's what we're here to provide. Now, there are times in the case of Checkpoint Software that I said was very recent, when we get into one and it moves against us right away. If you're a new member and you look at the portfolio and you see that the current price of a stock is below the entry price that we got in, you can still get in that one. You're still going to operate under our rules for the stops, and you're still going to use the same target, but you can still get in that one. And that's when it becomes especially critical to use the position size calculator that we provide you as a member. So, since the beginning of April, we got out of 6 stocks in the core portfolio. 4 of them were for full profits. One of them, Clorox, was about a half of a loss, and then one we got stopped out, but it was a small profit, tiny profit, like a 1/10 of 1% profit. So out of those 6 stocks that we got out of, 5 gains, 1 loss. That's pretty consistent with what we like to do. So our risk reward actually went up in terms of the percentage of winners versus percentage of loser actually went up in the core portfolio slightly, and our profitability, meaning how much we make versus how much we risk, actually went up a little bit, crept above that $1.65 mark for every dollar we risk. In the special plays, we got out of 3, 2 full position winners, and 1 was a little bit greater than a half of a loss. That was Spotify. And again, we're now over $2 reward for $1 risk, but our actual winning percentage stayed about the same because we fell into that range. That physical gold ETF that we had did really well for us. So that's the update. We outperformed again. The market is showing some broader weakness. Look at what the NASDAQ is doing. There's a very weak double top in the NASDAQ that came very close to fulfilling its target, but could continue to extend as the overall trend to the NASDAQ doesn't look good. The confusion from the last non-farm payrolls, that is basically because people aren't leaving their unemployment money to go take a job. There are jobs out there, and we'll see that in tomorrow's JOLTS number as well. So keep that in mind. That means that wage inflation is likely coming because some of the bigger companies are actually going to have to pay more to hire people. So that's what we're looking at. That's basically the update. I'll give you more later, and I'll give you more detailed stuff when the new newsletter comes out, and I'll talk to you guys very soon.